Have you ever wondered why your bank is so friendly until you try to take your money out? Or why they offer you free accounts, but somehow, do you always end up paying more? The truth is, banks are in the business of making money from you. And there's one thing they really don't want you to know, because if you did, you might never look at your bank the same way again. Section 1. The illusion of trust. Banks present themselves as guardians of your money. But behind the scenes, your deposits are not just sitting in a safe. The concept of fractional reserve banking, they lend out most of your money while keeping only a fraction. You think your money is there, but in reality, it's being used to earn them profit. And if too many people withdraw at once, that's when we see bank runs. But Section 2, how they profit from your deposits. Your checking account may be free, but it's not free for them. They loan out your money at 6.20% interest, while paying you 0.01% in savings. They invest in government bonds, stocks, and even risky ventures with your cash. They quietly use something called the spread, the difference between the interest they pay you and the interest they charge others, to make billions. Section 3, the hidden fees. They hope you ignore maintenance fees, overdraft fees, foreign transaction fees. Banks earn tens of billions annually from these. Example. In 2022 alone, U.S. banks made over $12 billion just from overdraft charges. They design their systems so transactions are clear in ways that maximize fees. And they bury this in fine print they know most people will never read. Section 4. The debt trap. Banks don't just hold your money. They own your future earnings through debt. Credit cards with enticing rewards actually have average interest rates above 20%. Miss a payment by one day? They hit you with penalty APRs and late fees. They want you to carry a balance, because interest payments are their most lucrative income stream. Section 5. The truth about free rewards and perks. Rewards aren't free. They're built into the cost you pay elsewhere. Merchants raise prices to cover credit card fees, meaning everyone pays, even if they don't use cards. Banks use rewards as bait, but the real catch is your long-term spending habit. Section 6. What they don't want you to know about savings. Even if you save, inflation quietly erodes your money's value faster than bank interest can grow it. In 2023, average savings rates were under 0.5%, while inflation was over 4%. The bank wins twice. They invest your money at high returns while you lose purchasing power. Section 7. The bigger picture. Control banks track every transaction, and your money is only accessible under their rules. They can freeze your account, delay transfers, and report suspicious activity, even if it's your own cash. In a cashless future, this control will only grow. Section 8. How to protect yourself. Diversify. Don't keep all your money in one bank. Use high-yield savings accounts or credit unions. Invest in assets that outpace inflation, stocks, real estate, or index funds. Learn to read the fine print before signing anything. Avoid carrying credit card debt at all costs. Your bank isn't your enemy, but it's not your friend either. They are a business, and like any business, they profit from those who don't understand the rules. The more you know, the less they can take from you. And maybe, though, that's exactly why they'd rather you didn't know this at all. On-screen text. Take control of your money before someone else does.